Hello guys, this is Mwenda Capital and we welcome you to this yet another session we are doing. So I'm going to continue with where I left off the other day, which is divergences. Today we are going to go through a couple of divergences. This is the MetaTrader 4 platform which I use to trade. And so we're going to start with the very first divergence. This one right over here. So I'm going to take my trend line with my stochastic. I'm going to place it over the stochastic just like that. I take it again, but now I place it over the graph. So you find that this is a very good negative divergence or bearish divergence in that at this points, this starting point here and at the indicator here, this one goes up, this one goes down. So normally at this point here and at this point here and at this point here and at this point here, we will expect the tip of this stochastic to be higher around this point here, so that this correlates with the graph here. But that's not the case. It's actually slightly lower, so that gives birth to the bearish divergence. Yeah, it's actually quite very basic and very efficient and very simple if you really want to try it. Let's look at another one. Here we have another bearish divergence. Take our trend line. Oh, sorry, this is our horizontal, not our trend line. Then we take our trend line just like that on the graph, then on the indicator, sorry, our trend line on the indicator. This is yet another bearish divergence. You can tell by this point here, starting point of the graph, starting point of the stochastic indicator, closing point of the graph, closing point of the indicator. You can see that it's slightly lower and the graph is slightly higher. So you would expect that the indicator will be, at least this tip here will be here, but it's not actually there. It's slightly lower. That is also another good bearish divergence. It actually gave us how many pips? 19371. Oh, almost 70 pips. Very good pips. So a dollar will give you almost $700, which is something good. Let's look at another one. Hopefully this one will be a bullish divergence. Yes. So this is a bullish divergence. The same procedure. We take our trend line. And we put it on the stochastic from this point to this point. We then again take our trend line now from the same points but on the graph. Yeah. Now when it comes to the bullish divergence, it's not necessary that you'll find it always on the descent. Sometimes it will be on the straight and level like this one, and sometimes it will be slightly lower, like this point will be right over here. It's still the same. It will still give you that bullish divergence. So at this point here and at this point here, that's our starting point. At this point here and at this point here, you can see that it's almost on the same level, but the stochastic divergence is actually on the climb. Yeah, so our entry point would likely be on this candlestick. After this candlestick, it has broken on over these candles, then our next entry point will be right over here. Or you can rather even wait for a reversal or a slight retracement, which is this, then enter your trades here, which would give you approximately 40 pips, sorry. So a dollar will give you $400. Yes, this is another bullish divergence. Let's see if we can spot another one. I believe this is another bullish divergence. Yeah, we set our trend line there, and then we set our trend line there, just like that. So this point, our beginning point and our end point here, and our end point here. So it's almost the same on the graph, the same straightened level on the graph, but on the indicator there is a slight climb, very slight climb. Let's see how much one pip would have given us on this one. So it would have given us almost 0.7, 0.9, well, almost 200 pips. Yes, and I'm also actually using the daily charts for, if you're wondering. Yeah, you can find it here. So that's a clean 200 pips. Yeah, and so that's actually how you spot divergences, bullish or bearish. Let me now talk about your entry after you are spotted. Now you're bullish or your bearish pattern. Okay, one final one about the bullish divergence. We take the base here, so it's almost the same. It's almost the same straighten level. Now we take the base of the, sorry, this is a horizontal line. Let me take a trend line. Yeah, just like that. So on this, you can see a case point here. There is a straightened level on the graph. It has a break, this level here, this level is here. So on the stochastic, you can see that it's on a slight climb, yeah, and here it's straightened level. So that gives you a chance to put a trade. And remember, you don't necessarily put it on this candle. You can even wait up to this. As it retraces up to here, we put our trades here, and then we wait for, let me see how much pips this gave. This gave almost 110 pips, meaning a dollar would have given you $1,100, which is something good too. Yeah, of course. What do you expect in a $5.3 trillion market a day? Yeah. So I'll begin to show you now your entry points with the divergences we already have established, both bullish and the bearish divergences. So something like this, you have put your trend line on the stochastic, your trend line on the graph. So the next thing we wait is for it to slightly break to the down low. So that when it is breaking on the down low, we have good prices and good value for our money, so that we can put our orders right over here. And when it climbs up to, you can even get out here. It's not necessarily even get out here. You can even get out here. That's a cool 0.98. That's a cool 200 pips, meaning you've invested a dollar. That's $2,000. Yeah. On to the next one. This was also a bullish divergence. You can see here. Here it's straightened level, and on the graph is slightly climbing. So if it were on an ideal graph, it would be just like that. Yeah, but you can use your, it's still a valid bullish divergence when it's like that, or when it's straightened level like that. Yeah. So here the same thing. After you've spotted it, after you have spotted it, you can either enter on the retracement here or wait for the next candle, which will be here, or this one, and then you can place your orders at the base of that candle, of the next candlestick, which will give you how many pips? 0.81. So this will give you roughly 170 pips, meaning if you invested $1, it will give you $1,700. Yeah. Next one. Yeah. So this was also a bullish divergence. You can see by the points here. So personally, this one I will have entered right over here on this, because this candlestick could have confirmed a rise on the indicator. So I'll have entered here, or even at the base of this next candlestick, this big one right over here, but at the base. So 0.797 would have given you 200 pips. So $1 would have given you $2,000. Yeah. So basically that's how you do it. That's how you do it. And when to invalidate your signal after you have tracked the divergence, once it reaches your overbought or oversold zones, just right over here, consider that signal invalid. Yeah. Now look for another one in another chart for you to continue with it. Was there another? Yes, this was the bearish divergence we talked about. So even this one, after you have spotted the divergence, which will be here, you can either enter at the base of this candlestick, or here, or at the closing price of this candlestick, or you can enter at the beginning of the next candlestick, which is right over here, which would give you roughly 19112, 800 pips, sorry, 80 pips. So that, which translates to 800 points. So that's $1 would have given you $800 on this bearish divergence. Then before it invalidates, after you have entered here, you see the indicator is here. So we expect to leave almost here at this point. Here. Yeah. That's how you enter, that's how you leave your trades. Another, I believe this is the last one. Another bearish divergence is this one. So with this one, I would have expected you guys to enter either at the top of this candlestick when it closes that candlestick, or at the beginning of this candlestick here, or even this one at the closing price here. Yeah. So $1 would have given you how much? Let us see. Actually, $1 would have given you almost 190 pips, which is 1900 points, which would give you $1900. That's $1. Yeah. So when it comes to where you live, you see, I'm telling you where to enter, and also I need to tell you where to live. So when it comes to where to live, you just look at the oversold level here, and then you look at the graph. So this is where we would have left, right over here or over here. Yeah. So guys, that concludes my second video of divergences. More still to come. We are going to talk about a lot of the technical stuff in trading. So don't forget us to follow on Facebook, Twitter, Instagram at Eric Mwenda Capital. And also you can visit our website at www.ericmwendacapital.com. And feel free to talk to us, yeah? Cheers, guys.